Kim Persky, and today we're going to be talking about utilizing the accounts receivable and accounts payable functions in QuickBooks. So first we're going to talk about accounts receivable. First things to note, what is accounts receivable? Basically, accounts receivable keeps track of money that your business collects from customers for the goods and services that they provide. And another thing to note is that QuickBooks as a whole is set up in modules. So accounts receivable is one of these modules. And in order to use it properly, we need to make sure that we're recording invoices and entering payments correctly so that way we can use the module in its full functionality. So first, we're going to go through setting up customers. You can look at this home screen here when you open QuickBooks, and you'll see the customers right here. Or you can go up to the navigation tab where it says customers, click here and go to the customer center. This customer center screen will pop up, and let's set up a new customer now. So we'll click on new customer and job and new customer. Here we are going to set up Kevin's Kickboxing. And there's a bunch of fields in here that you can populate as necessary for your business. The main things that you'll want to update are the customer name. If you have any phone number information, email address, you'll want to go ahead and put that in as well. There's also payment settings if you need to add anything in there. Your sales tax settings will be important if you want to note in QuickBooks whether or not this customer is one that you charge sales tax to. And so you can indicate that here. And then additional information, and then other job information. You're going to go ahead and click OK, and that will set up Kevin's Kickboxing. If you ever need to go in and change any customer information, say you found out that their phone number changed or their address changed, all you have to do is come back to this customer screen and select the customer that you want to change their information. You'll right-click on there and then go and select Edit Customer Job, and then you can edit any information in the screen as necessary. Next, we're going to go through how to set up your sales tax rate in QuickBooks. So we'll go ahead and we'll go to the Edit tab. We're going to go down to Preferences. And this screen will pop up. We'll make sure that sales tax is selected in this left navigation bar. We'll go up to Company Preferences, and then we'll select this box, Add Sales Tax Item. And then here you'll want to make sure that the appropriate type is chosen, so sales tax item. And then we'll just go ahead and put sales tax. And then you can indicate your sales tax rate for your company. So we'll put 8.25. And then it's also important to indicate the tax agency. So for us, that will be the Texas Comptroller. We're going to select that. I'm not going to go ahead and set this up because it's already set up in this QuickBooks file, but you would just click OK, and then that would set up the sales tax rate for your company in QuickBooks. I'm going to click Cancel. And if your sales tax rate ever changes and you need to update that, you'll go ahead and you'll go to this List Navigation tab, and you'll go down to Item List, and then you'll see the sales tax amount down here at the bottom. And if you need to edit that, you'll just right-click and you'll click Edit Item, and it'll take you to a similar screen where we were at before whenever we set it up, and you can just change the rate here if you need to. Next, we're going to go through how to create invoices for our customers. So we'll go back here to our home screen, and here in the middle section, there's the customer section. You can click here to create invoices, or we can go up to the customers in the navigation tab, click here and go to create invoices. And so this invoice screen has a lot of different fields. One of the important ones to fill out will be this customer and job. We're going to issue this invoice to Kevin's Kickboxing. We'll also want to indicate the date that we're issuing this, so we'll issue this on January 5th. And then there's some additional information here if you need to populate that as necessary. And let's say that we're selling consulting services to Kevin's Kickboxing. So in the item code section here, we'll go ahead and type consulting service. And then we'll say that we charged him $2,000 for the consulting service. And consulting services is non-taxable, so that was set up as a non-taxable item. There's no tax there. We're going to go ahead and click Save and Close. Now we're going to go ahead and enter another invoice. So we'll go back up to the Customer's Navigation tab and select Create Invoices. And if you need to issue an invoice to a customer that wasn't previously set up, you can set up a new customer through this field by clicking the drop-down menu and selecting Add New, and it'll take you to the customer setup screen as we were at before. So this invoice we're going to issue to Designs by Diane. We'll issue it on the 5th. And for this one, we're going to sell some remodeling services. And so that's not something that's set up, so we're going to go ahead and set up a new item. We'll click to Add New. We'll say that this is a service, and we'll put remodeling service. So it's important to put this item name and number field, and then also you'll need to populate the account down here, which is the income account that this money is going to go to for this service. So we'll just select income, and then we'll click OK, and now that's set up. And let's say that we charge Diane $1,000 for this remodeling service, and if you have a description, we can put kitchen in here if that's maybe where we did the remodeling. And then down here, it will calculate the sales tax at the rate that we had indicated. And then we can go ahead and save and close, and this will save the invoice. And now the next step that we're going to go through in the Accounts Receivable module is the recording of payments that we received from customers for the invoices that we had issued. And so it's important to record the payments correctly in QuickBooks in order to offset the invoices, so it's the completion of the Accounts Receivable module. In order to receive payments, you can click on this Receive Payments right here on the home screen, or back up at the Customer's Navigation tab, and you can go down to Receive Payments. And in this screen, we're going to indicate who we're receiving a payment from. So here, let's say that we are receiving a payment from Kevin's Kickboxing. We'll select that, and you'll indicate how they're paying you, if it's cash or check. So let's say he paid us cash. We'll say the invoice was $2,000, and we'll say that he paid all of it. So we'll put $2,000 in the payment amount field, and then you'll want to indicate the payment date. And we'll say he paid us 10 days later after the invoice, so January 10th. And if there's any reference number that you have from this cash, you can go ahead and put that in here, and then it will select it to apply against the invoice. And then we can go ahead and click Save and Close. Now we're going to go ahead and record the receipt of another payment for the other invoice that we recorded. So we'll go to Receive Payments again, and this one will be from the Designs by Diane. And let's say that for this one, she paid us with a check. And so let's say that she's going to also pay her full amount. And down here, you can indicate if there was a certain check number that she paid you with. You'll indicate that there. And then we'll go ahead and save and close. And that will clear out that invoice. And so the next item in the Accounts Receivable module that we want to talk about are the undeposited funds. So typically when a customer either mails you a payment or comes into the office to pay you, it's not going into the bank account right away. So you might store it in a safe deposit box locked in your office, and then maybe you'll make those deposits to the bank weekly or so. So when you're receiving the payments, they're going into the Undeposited Funds account in QuickBooks. And so we need to clear these so that way we can show that we've received them in the bank whenever they're deposited. So in order to do that, we're going to go up to Banking, go to Make Deposits, and automatically QuickBooks will pop up that they know that there's some undeposited funds and they want to see if you deposited any of these. If you, for whatever reason, click out of the screen and then need to get back to it, you'll just go up to this Payments box up here in the Deposit screen, and it'll bring this window back. And so let's say that we went ahead and we deposited the one from Kevin's Kickboxing, Designs by Diane, and also this end-of-year receipt. We're going to click OK, and it'll show that these amounts were deposited into the bank, and you can add any additional deposit items as needed in here, and this is going to clear out our undeposited funds account. So we'll go ahead and we'll click Save and Close. The next item in accounts receivable that we want to talk about is the accounts receivable aging reports. And so we're going to go up to reports. We're going to go down to customers and receivable, and you'll see that there's a summary report and a detail report. We're going to go to the summary report, and then we'll go ahead and look at it for the last year. And so this report is important because it gives you an overview and a snapshot of accounts receivable at a particular date in the year. And you might want to look at this as necessary for your business. If you have a lot of customer activity and receipts coming in and invoices outstanding, you want to look at this more often. If there's not as much activity, you might not need to look at this as much. The main thing to focus on is getting the long outstanding items paid. So like this one it's pretty current, but these items over here are pretty outstanding in the greater than 90 days section. So we want to get our money from our customers and get them to pay us. There's different functions up here to filter by different dates and different days due, so we can edit those as necessary. Another note that I want to remind you of is that if you are familiar with the recording of journal entries in QuickBooks, we want to make sure to never use that function of recording journal entries to record any kind of accounts receivable or accounts payable. So now we're going to go on to our next section of utilizing the accounts payable section. So we'll exit out of this and we'll go back to our home screen. So this is going to incorporate the vendor section. And so first of all, what is accounts payable? So accounts payable keeps track of money that our business owes to the different vendors that we purchase goods and services from. And this is another module in QuickBooks. So we must use bills and bill payments in order to properly use this function in QuickBooks. So first we're going to go through setting up vendors. So you can set up vendors by clicking on vendors here or vendors up in the navigation tab, and we can go to the vendor center. And this will show you all the different vendors that you have at the current time and any outstanding balances that you have with them. So we're going to go ahead and set up a new vendor. So we'll click on new vendor, select there, and it'll bring up this vendor screen. And we're going to set up Brandon's Bakery. And you can indicate as much information as necessary here. We would highly recommend that you enter their official company name. If it's Brandon's Bakery, LLC, we'll put that in there. Enter a phone number and an address also. And then there's also various tabs here on this left-hand side. There's payment settings. You can enter information there. In this tax settings tab, whenever you're starting to do business with the vendor, you want to go ahead and obtain a W-9 from them and put their vendor tax identification number in this field. And Stephanie will go over a little later about why that's important for 1099 reporting. But just know that this is where you'll enter that information. And then the account setting tabs, let's say for Brandon's Bakery, we typically buy muffins or some types of sweets from him, so they're meals and entertainment. So we can go ahead and assign that any bills that we have with Brandon's Bakery will be meals and entertainment expense, and that'll make it a little easier for input later. So we'll select meals and entertainment here. Another example would be if you're trying to set up CPS Energy, you could designate utilities to be your expense account here. And then there's any additional information. You can indicate that here. And we can go ahead and click OK. And then that will show you that Brandon's Bakery has been set up. Once again, if you need to edit any vendor information, their address change, their phone number, you'll just go ahead and you will right-click on the selected one and then click Edit Vendor. And then it will take you back to this screen and you can populate any information as necessary. And then next, we're going to go through entering bills. So you can do that through the home screen. Right here is the Enter Bills. Or we can go up to the Vendors Navigation tab and select Enter Bills. And so in this screen, the important fields that we'll want to populate are the vendor. So let's say we're going to issue one to Amanda's Advertising. And then you'll also want to indicate the date that you received this bill from them. So we'll say we received it on the 10th. And then QuickBooks will automatically default this bill due date to be 10 days from the date that you're entering or that you showed that you received the bill. But you could change this if it's necessary for your business. We'll say that we got charged $2,000 for advertising, from Amanda's advertising. You can add a memo if you need to, say it was for signs or website work. You can put that in here. And then the accounting or the advertising and marketing account has already been chosen for the expense. And then the $2,000 amount has been entered down here. And so we'll go ahead and we'll save and close this bill. And now we're going to go ahead and enter another bill. So we'll go back up to the vendors. We'll go to enter bills. And we'll say that this bill is from Demis Furniture. Once again, you'll want to indicate the date of the bill and the bill due date. And let's say that this one is for $5,000 and we bought a sofa. And so this one's going to go against a fixed asset account and not an expense. So we'll go up to the fixed assets and we'll put that in furnitures and fixtures. And this $5,000 amount is in here. And we'll go ahead and save and close this invoice. Next, we're going to go ahead and go through how to pay bills in order to fully use the accounts payable feature. Since we entered the bills, now we got to go ahead and pay those bills properly in order to clear out. Next, we're going to go through how to pay bills in QuickBooks. So as we mentioned, accounts payable is one of the modules, and so we went over the entering bills function, and now we need to clear those entered bills with bill payments. And so in order to do that, you can go to the Pay Bills icon here on the home screen, or you can go into the Vendor Navigation tab and then select Pay Bills. And so QuickBooks will pop up this screen of all your outstanding bills. And so for this example, we're going to go ahead and pay Amanda's advertising. And then it'll select the amount to pay is the full $2,000. And then you'll select the payment date. And let's say we paid it 1/15/2014. And then you'll select the method of payment, so credit card or check. We'll say we'll pay this one with the credit card, and you'll indicate if you have multiple credit cards, which one. So we'll put this against the Chase card, and then we'll select Pay Selected Bills. And then next, now we're going to pay Demis Furniture for the sofa that we bought. And say for this one, we're going to pay it with a check. So if you accidentally go into the Write Checks function, and then you're going to put in Demis Furniture, QuickBooks will automatically pop up this window that says, hey, you have a bill with this vendor. Are you sure you don't want to use the bill pay feature? And you're like, oh yes, I remember I need to clear that bill. So you'll go to the Go Pay Bills button, click there, and it'll take you to the screen that we were at before. And now we'll go and we'll select Demis Furniture. And let's say that for this one, we're not going to pay this full $5,000. We're just going to pay $3,000. So we'll just enter that in this amount to pay column over here on the right. And then down here at the bottom, we'll say that we're paying this on 1/15. We're going to pay this with a check. And then I'll give you the option that if you're printing your checks through QuickBooks, you can click the To Be Printed. Or if you're assigning your check numbers manually, you'll click Assign Check Number. And then we'll click Pay Selected Bills. And now it'll prompt you to select the appropriate check number, or to enter the appropriate check number that you paid this bill with. And we'll go ahead and click OK. Now we're going to go over the last feature of the Accounts Payable module, which is the Accounts Aging Reports. And to view that, we'll go up to Reports and the Navigation tab. We'll go down to Vendors and Payable, and you'll see that there's an Accounts Payable Aging Summary and Accounts Payable Aging Details. So we'll go to the Summary Report, and then you can go ahead and we'll select the last fiscal year. And so why is this report important? It's because that it allows you to know what bills you have outstanding, and it allows you to see, are we able to pay these bills? Unlike the Accounts Receivable Aging Report, vendors are probably bugging you if you have really old outstanding items here because they want you to hurry up and pay them. So once again, you'll need to look at this report as necessary for your business. If you have a lot of outside vendor activity, you might want to look at this a little more to make sure that you're current on all your bills. Or if you have very few vendors, you might not need to look at this as much. And that completes this portion of the utilizing accounts receivable and accounts payable portion of the training. And now I will turn it over to Stephanie, who will talk about using memorized transactions in 1099 reporting.
To set up a memorized transaction, pull up and enter the kind of transaction you want to memorize. For instance, let's set up a monthly bill for liability insurance. First, we'll go to Vendors and enter Bills. We'll fill out all the information, the date that the bill is due, the amount, let's say $200, the vendor. Let's make sure it's going to the right account, insurance. And let's add a memo. Let's call it monthly liability insurance payment. Since the insurance payment is the same month after month, we can memorize all of the details for the monthly bill. If one or more details are likely to change, leave those fields blank. I'll show you how to deal with that next. Once you have all of the unchanging parts of the transaction entered, click Edit and Memorize Bill. You can also memorize the bill by clicking Memorize up here in the bill input box. Now you can name the transaction for future reference. We will call this one liability insurance. At this point, we are able to specify how the transaction is memorized. Fill out all of the fields that are applicable. If you select Add to My Reminders list, the transaction will pop up in the Reminders list when you log into QuickBooks at the frequency you set in the How Often field. This kind of memorized transaction is best for payments with a set frequency but with variable amounts, such as your monthly electric bill. If you select Do Not Remind Me, the transaction will be saved in the Memorized Transactions list, but QuickBooks will not automatically remind you of it. This option is best for transactions that are not on a set schedule, such as purchase orders for office supplies. If you select Automate Transaction Entry, QuickBooks will automatically generate the transaction at the frequency you specify in the How Often field. This option is best for transactions that occur on a set schedule for a fixed amount, such as the insurance payments in this example. We will fill out the How Often section since we selected Automate Transactions Entry. This field is only available for the automated transactions and those that are on the reminders list. Fill out the next date field for the date you want the next automated transaction or reminder to occur. This field is also only available for automated transactions and reminders. Enter the number of remaining payments here if the transactions have a fixed term. Since insurance policies are generally for 1 year, we will have 11 payments after today. You can use the days in advance to enter field if you want the transaction to be entered in advance of the due date. We won't use that for this example. Now that we have filled out all of the fields we need, click OK. This brings you back to the original transaction screen. If you want to enter this occurrence of the transaction now, click Save and Close or Save and New. If you are just setting up the transaction for future use, just close it out without saving it. Now that we have set up our memorized transaction, let's talk about how to retrieve them. You can retrieve all of your memorized transactions by going to Lists and then Memorize Transaction List. Here are all of your memorized transactions, including the automated ones, which are indicated by the check marks in the auto column. If you set up an automated transaction or reminder, you'll receive a notification for any current transactions each time you open QuickBooks. You can also access the reminders at any time by going to Company and Reminders. Now, let's say that a year has passed since we memorized and automated our liability insurance bills. We just renewed the policy and our premiums have gone up. You can edit the memorized transactions through the Memorized Transactions list. To change the amount, double-click on the transaction you want to edit. Change the amount and anything else that needs to be adjusted, and click Memorize. When the pop-up comes up to warn you that you have already memorized a transaction for that vendor or customer, click Replace. This will apply the edited transaction to the settings you previously established. To edit the settings for the memorized transaction, right-click on the transaction in the Memorized Transactions list and select Edit Memorized Transaction. From here, we can edit the frequency, due date, number of payments, and automation settings. Since all of the settings for our liability insurance bills will probably stay the same, we will not change any of our settings. There you go. Over a month, memorized transactions can save you a bit of time, and it also makes it hard to forget what you have to pay and bill each month, which can be very helpful if you have a lot of regular customers and/or bills. Speaking of paying vendors, if your business pays vendors for services throughout the year, you probably have to think about the IRS requirements for Form 1099 reporting. Quickbooks is a great tool to help with 1099 reporting using the vendor setup. The IRS requires that businesses issue Forms 1099 each January to certain vendors for various types of payments. We won't go into a lot of detail about what kinds of payments must be reported on a Form 1099, but there's a list of examples in your handout for reference. Not all vendors are eligible to receive a Form 1099. You are generally not required to issue 1099s to corporations, nonprofits, and other tax-exempt entities, for example. Because of this, it is important to know what type of entity your vendors are. If a vendor is eligible to receive a 1099, you will need additional information about them in order to prepare the 1099, including their mailing address and tax identification number. The IRS issues Form W-9 that businesses should use to retrieve all of the information they need to discern if a vendor is eligible to receive a 1099 and all of the additional information that is necessary for issuing one. Vendors should be very familiar with W-9s, and many times they will have them pre-filled for any customers that request them. Always request a Form W-9 for each vendor you do business with and keep it on file. This includes any independent contractors. Once you receive the W-9 from a vendor, you are going to want to enter the information into the vendor information screen in the Vendor Center. Fill out the information in the appropriate fields like Kim showed you earlier. If the vendor is eligible to receive a 1099, make sure to check the vendor eligible for a 1099 box. This will make pulling up the information needed for preparing 1099s much easier come January. Once January rolls around and it is time to start preparing 1099s, you are going to want to run a 1099 detail report to get the information you need to fill out the 1099 forms. Go to Reports, Vendors and Payables, and 1099 Detail. Change the date range to the year that is just passed. Under the 1099 options, select only 1099 vendors, which will bring up only the vendors for which you clicked the 1099 box. For our purposes, we're going to select all allowed accounts. As long as you have entered all of the W-9 information and have identified all of your vendors that are eligible to receive a 1099 in the vendor setup, this report will help you complete the 1099s. Now I will pass it off to Thor, who will talk to you about generating reports in QuickBooks and the class tracking feature.
We're going to be looking at the profit and loss statement. So to generate this report, you want to go up here to Reports, and down to Company and Financial, and over to your Profit and Loss Standard. And go ahead and click on that. And so the profit and loss statement is a financial statement that summarizes the revenues, costs, and expenses incurred during a specific period of time, usually a fiscal quarter or year. These records provide information that shows the ability of a company to generate profit by increasing revenue and reducing costs. The profit and loss statement is also known as a statement of profit and loss, an income statement, or an income and expense statement. So the first thing you're going to want to do is go into your customized report and specify the dates for your profit and loss statement. Here we're going to be looking at all of 2013, so you're going to want to put in 2013, and we'll specify cash and hit OK. And as you can see here, this is your profit and loss statement for 2013. Okay, so next we're going to be looking at our balance sheet. So to generate this report, we're going to go back up to Reports, down to Company and Financial, and then over and down to your Balance Sheet Standard. And again, you're going to want to specify the year-end date for the balance sheet you want to look at. So go ahead and put in the end of 2013 here, 12/31/13. Okay, so the balance sheet is a financial statement that summarizes a company's assets, liabilities, and shareholders' equity at a specific point in time. These three balance sheet segments give the user an idea as to what the company owns and owes, as well as the amounts invested by the owners. Your total assets should always equal your total liabilities. And so here you can see at the top we have our cash balance in our bank account at the year end, our accounts receivable, or any undeposited funds that you may have on hand. You see your total current assets. Down here you can see your equipment, your delivery vehicles, any other equipment you may have, copiers, computers, things like that. And you can see your furniture, your buildings, and your accumulated depreciation right there. And here you see your total assets. And as we go down, you can see your accounts payable. You can see the balances on any notes you may owe. Let's see here, looks like you still owe some on your van and some on your office equipment. And then all the way down here at the bottom, you can see your total liabilities and equity. And if you compare the two, you'll notice that we are in balance. Okay, so next, we're going to look at our statement of cash flows. So again, we're going to go up to our reports, down to company and financial, and then over and all the way down to our statement of cash flows. Now, again, we're going to need to specify the dates for our report. So we're going to put in January 1 of 13 through 12/31/13. And the statement of cash flows is the statement which shows the amount of cash generated and used by a company in a given period of time. It is calculated by adding any non-cash charges, such as your accounts payable, to your income after taxes. Cash flow can be attributed to a specific project or to businesses as a whole. And I just wanted to pull this report up for you guys just as an example of another report you can generate. But I'm not going to be really going into a whole lot of detail on this particular report right now. So we'll just go ahead and close out of that one. And now we're going to look at our general ledger. So again, we're going to go back up to our reports. There we go. Reports. Then we go down to our accountant and taxes. And then over and down to our general ledger. And again, we need to specify the dates we would like to look at. So again, January 1st, 13 through 12/31/13. There we go. So our general ledger, this is basically your main accounting record for the company you're working with. It shows your complete record of all your financial transactions over the life of a company, or here for 2013, our specified time period. The ledger holds your account information that is needed to prepare the financial statements and includes accounts for assets, liabilities, owner's equity, revenue, and expense. It will contain both the debits and the credits, as you can see right here. So again, just wanted to pull this up for you guys, show you how to generate this report. But again, I wasn't going to go into a whole lot of detail on the general ledger. Just wanted to give you guys an idea on how to generate that particular report. So I would now like to show you how to customize a report for different purposes. So if you go over here, you'll see the Customize Report box in the upper left-hand corner. Go ahead and click on that. And here you can change your dates. You can change from accrual to cash, depending on which reporting method your company uses. And you can add previous years. Here we're going to add a previous year and see our dollar change year to year. Go ahead and click OK. And now you can see that your cash balance at the end of 13 is higher than it was at the end of 12. You can see that further down here, you purchased a new vehicle here in 2013, and overall your total assets and liabilities have gone up. Okay, and now we're going to take a look at our profit and loss statement. Again, if you go over to the upper left-hand corner, click on Customize Reports. Cash is already selected there for you. You're going to click on the previous year and your dollar and percent change. Click on OK. And this gives you a comparison of your profit and loss in 2013 over 2012. This is very useful to see how your company is doing year to year. And it looks like here you've got a nice increase over 2012. So we are doing much better. So now that we've customized some of these reports, I would like to show you guys how to go ahead and memorize those. So next time when you come back into QuickBooks, you don't have to change the settings. You can just go to your memorized reports. Okay, so you're going to want to go up here to memorize. We'll click on that. You can name your report whatever you'd like it. So we're going to call this profit and loss comparison. Oops, yes, okay, there we go. And we're going to say yes, we want to save it in our memorized report group. And we're going to want to save this under, we'll leave it in the accountant category. Okay. There we go. Now you have saved one of your reports. So if you want to pull up this report again, we'll close out of it. Go back up here to your reports, down to Memorize Reports, over and down to Accountant, which is the subgroup we saved it in, and down here to our Profit and Loss Comparison. As you can see, it opens back up with those settings, your pre-saved settings as a comparative profit and loss. You can change the dates if you would like, modify it, but it will always open up with the comparison columns already there for you. Okay, so let's say that you came back into your report and you decided to change it a little bit again. Let's just say that you don't want that percentage change column anymore, so we're going to unclick our percentage change down here. We're going to click on OK. Our report is refreshed without the percentage change column, just your dollar change year over year. And let's say you'd like to have it open that way again in the future. So you can click on Memorize again. If you just simply hit Replace, then when you go back in, we'll close it out. When you go back into your reports, Memorized Reports, back over to our Accountant, which is where we had saved it, and down to our Profit and Loss Comparison, we can see here that it has saved that change for you. Now, if you didn't want to replace that report, you simply wanted to create another report, we do the same thing, Customize Report. We're going to add the percent change column back in. You can click on OK. There's our percent change column. We're going to click on Memorize. If we say New instead of Replace, we can rename this Profit and Loss Comparison 2. And again, we can pick where we'd like to save it. So we're going to save it under Memorize Reports and under the subgroup Accountant. Click on OK. And close out of it. Back up here to our reports, Memorized Reports, over and down to Accountant. And now at the bottom, you can see you have two memorized reports with slightly different criteria. Okay, so now we're going to move on to assigning a class. This is actually a feature of QuickBooks that allows you to categorize all of your income and expense transactions by location, product, service, well site, really any criteria you would like, and then generate reports that split out your income and expenses by the assigned classes. So to do this, we first need to turn on class tracking. So you want to go over here to the upper left-hand corner of your screen, click on Edit, and then we go down here to Preferences. Drag that back over. Then you want to click on Accounting at the top. Go to Company and Preferences, the second tab there. And then we want to click on Use Class Tracking for Transactions. As you can see here, it has already been selected, so we will leave it alone and click on OK. Now that we have done that, to create a class to assign to the transactions, we want to go up here to Lists, again, top upper left-hand corner. We're going to click on that. We're going to go down to our class lists, click on that, and here you can see we already have some of our classes assigned. These are either location, we've got our Lotus location, our San Antonio location, or simply overhead items. If you did want to create a new class, we would click on Class, on New, and you can name this whatever you would like. Let's say you have opened up a new location in Dallas. We're just going to say our class name is going to be Dallas. We don't need a subclass. We're going to go ahead and click on OK. And now we have a new class. Okay, so we're going to close out of our class list. Now to use our class tracking when entering a check or a deposit, you would simply, let's go over here, we're going to go to Banking, let's go to Write Checks. And let's just say we're paying our utilities. Let's see what we have here. Well, let's just say we're going to pay our Lotus utilities. Okay, Lotus utilities. And we'll just add them as a vendor really quick. There we go. Want to make sure our dates are correct since we're working in 2013. We'll just change this to 2013. Let's say you paid them $450, very cold winter. And then, after you enter in your check, if you go down to the bottom of your screen here, let me move that up a bit, over here on the left-hand side, you'll see Class. So you want to click your drop-down, and since we said this is a bill for our Lotus location, you want to put Lotus as your class. Go ahead and close. Okay. So let's now say that you wanted to enter an invoice using class tracking. So you want to go ahead and go on up to your customers. And then down to create invoice. Okay. So we're simply going to say up here, there are a couple ways we can do this. We can either assign the entire invoice to a certain location, or you can split the invoice between different locations. As you see up here in the middle, we have class tracking. If you click on that, let's say this is also from Lotus, 12/2013, invoice number 31. We're going to bill this to customer number 1. And if you went ahead and saved this, then the entire amount of this invoice would go to the Lotus location. However, let's say that this was split between your Lotus and San Antonio location. So you'd go back up to the middle up here, remove Lotus from the general class tracking. Then if you come down here over on the left-hand side, you'll see class tracking down here. And then you can split up your transaction between different locations. You could say half of it's going to go to San Antonio and half would go to Lotus. You would enter in your quantities, your however much each item cost, and then when you save this invoice, it will split the transaction between your different locations. So we're just going to go ahead and close out of this. We won't save that one. Okay, so now that we have entered a number of transactions there using our class tracking, here's the best part about that. So we're going to go and look at our transactions by class. So You want to go back to your profit and loss report. So we're going to go up here to our reports and go down to our company and financial. We're going to go to our profit and loss. Again, we need to specify the dates we would like. So January 1 of 13 through 12/31/13. Okay, so here's our basic profit and loss for our 2013 business year. Now, if you go up here to what says columns, right over to the left, you'll see total only. We can change this to class tracking. So if you click on your drop down up here, go down to class, and now you can see it splits out your income, your expenses, and down here at the bottom, your net income by location. So as you can see, your Helotes location seems to have had a very good year. You've got your overhead items here. And then your San Antonio location, yeah, it looks like they might need a little bit of help. But this is really the advantageous part about using class tracking is it gives you a much better idea of which location might be doing better, or if these happen to be different well sites. This could be well site 1, this could be well site 2. These could be different departments within your location. This could be the clothing department. This could be, say, the feed department. Many different ways to set this up, but it allows you to track different items, departments, well sites, and see where your profits are coming from, and maybe where you're generating your losses. A great way to evaluate your business.